24/7 banking robbery in India, a legal terror unleashed on the public. Give a man a gun, he can rob a bank. Give a man a bank, he can rob the whole world. This is the considered assessment about the banks by the larger public in foreign countries. The banks in India are exonerated from such charges because they are predominantly managed by public sector enterprises. Do the banks in India indulge in robbing the borrowers? Yes, reveals the RTI Act. The RTI reveals the answers to the imminent questions of why and how the banks are robbing the borrowers in India. The banks are forced to rob because the Ministry of Finance and the Reserve Bank of India, which were boasting of strong fundamentals of the banks in India, are claiming overnight that the banks had declared a technical write-off to the tune of 1 lakh crores to them. The ministry was also claiming that it had asked the banks to create a separate department to recover the technical write-offs from the borrowers. What is a technical write-off? What it means, this money may come, but it will not come unless the banks rob the unsuspicious borrowers with high interest charges. The banks cannot declare profits because
where would the money for this have come from? Money does not grow on trees. Money does not grow on trees.
On 27th of April 2012, the Government of India submitted to the Parliament a data regarding the frauds perpetrated on banks in the home loan segment. In 2010, frauds perpetrated were to the tune of 18,052 crores in just 596 cases. In 2011, in 700 cases, the value defrauded by the borrowers was to the tune of rupees 21,964 crores. In the year 2012, in just 100 days, 104 cases has been reported to the Government of India to the tune of rupees 2,398 crores. In all, a total of rupees 43,000 crores have been defrauded by fraudulent people from the banks. Unless the banks rob the unsuspicious borrowers with high interest charges, the banks cannot declare profits because
where would the money for this have come from? Money does not grow on trees. Money does not grow on trees.
In the year 2010, the Central Vigilance Commission alerted its vigilance officials that the commission had come across many cases in which the bank officials themselves are indulging in looting the bank's treasury by stealing the passwords of the organization's banking account from their co-employees. How much money was looted? Nobody knows. Unless the banks rob the unsuspicious borrowers with high interest charges, the banks cannot declare profits because
money does not grow on trees. Money does not grow on trees.
The banks in India are exploiting the defaulting borrowers in the segments of retail, small, medium and other middle class people through the SARFAESI Act, but they have extended debt restructuring options to the unsecured loans to the tune of 3 lakh crores. It involves a lot of interest waivers and subsidized interest rate loans for a future period which is not specified. How much the banks have lost in such waivers and how much more they are going to lose because of these subsidized loans, nobody knows. Unless the banks rob the unsuspicious borrowers with high interest charges, the banks cannot declare profits because
money does not grow on trees. Money does not grow on trees.
Now we have reached the most critical part of the RTI revelations. Question number 1. How the systemic betrayals are perpetrated over the borrowers. Question number 2. How the system is able to conceal or sacrifice exorbitant losses to the tune of lakhs of crores over a period of time. View this video clip.
நீ ஆன்சர் போடுவேன். நான் ஆன்சர் போட்டுதான்டா கணக்கே எழுது.
The villain is boasting that he is used to the habit of first writing the answer of any mathematical calculation even before working them out formally.
நீங்க முதல்ல ஆன்சர் எழுதிட்டு அப்புறம் கணக்கு எழுதுவீங்களா? குரு சார், கணக்கு தப்பா வரும் குரு சார். முதல்ல கணக்கு எழுதிட்டு அப்புறம் தான் ஆன்சர் எழுதணும்.
Is retorting that the habit of writing the answer first and formal workout next to derive the mathematical answer is prone to fault lines. You may be amused the relevance of this audio video bite to the banking system. In fact, this is the seed of betrayal which is planted by the banking system by abusing the trust of public. What are the fault lines? The policy of mathematical answer first, workout next will facilitate the convenience or tendency to reframe, manipulate the mathematical question itself to suit the answers already written. This is the secrecy behind how the easy monthly installment EMIs have become extended monthly installments. The banks perpetually reframe and manipulate the applicable interest rates to suit the requirement of money. In other words, the answer written by them already in the borrower's loan accounts and the quantum of the answers, that is the interest charges lifted from the borrower's accounts, will depend on 5 factors. 1. The influence of the borrowers over the bank. 2. Ignorance of the borrower. 3. Inefficacies of the administration. 4. Prevalence of bad debts in that bank. 5. Indulgence of the bank to show profits. The banks, to escape any culpability of the offences, are resorting to 3 excuses. Excuse number 1. The banks are claiming that they have adopted maker-checker policy. This policy implies that the borrowers must verify the correctness of the interest charges lifted by the banks from their loan accounts. Women, students and farmers who are not aware of the credibility of the system were trapped. Excuse number 2. This is a footnote you can find in your loan statement. Unless the constituent notifies the bank of any discrepancy in the statement of account, it will be taken as found correct. The banks exonerate themselves of any responsibility regarding the entering of any deductions to the loan accounts of the borrowers. Number 3. If the borrowers confront the banks with questions, the banks will reason them citing the measures of the RBI. Factually, the RBI had relieved itself from the process of determining the applicable interest rates since 18th of October 1994. This is how the banks are transferring their inefficacies and losses over the unsuspicious borrowers within their system. This is not the end of the betrayal. They had reached only the sprouting stage. Writing the answer first policy distort the relationship status of the borrowers with the banks. How? The mathematical workouts are nothing but the bills or vouchers we receive as customers from a vendor. This is an accountancy protocol of sanctity to both the customer and vendor. For the customer, the bill or voucher will serve as a proof of document to get any redressal in future as and when a problem arises. For the vendor, it achieves the sanctity to his revenue account. In simple words, sanctity to the cash box. No employer will allow his employee to sell products without generating a bill because it will lead to the incidences of siphoning out money from his cash box. The banks are not generating any vouchers before receiving the interest charges from the borrowers. The banks, in an act of depravity, deferred sanctimoniously the protocol of accounting sanctity. The banks are literally generating receipts for the money lifted as interest charges from the borrower's loan accounts. This is inimical to collecting a donation from a donor. As and when a borrower becomes a donor to the system, banks are able to take all the misappropriations from the borrowers into their cash boxes. The plant of betrayal advances to the branching out stage. The donor cash box status to the revenue account of the banks extend convenience to the administration. The banks can lend or loot. The banks can swap or steal. The banks can excuse or exploit. The banks can extricate or exterminate. View this clip. This is a portrayal of a woman having psychiatric disease of split personality disorder. The value of the loyalty of the women swings widely from one extreme to another. As and when the banks alter the status of the borrower to donor, the banks are inflicted with split institutional disorder. The only core value of the system will be dishonesty. The character of administration swings between two extremes of dishonesty. 1. Dishonesty to the institution. 2. Dishonesty to the borrowers who are not so privileged. Just view this video clip. The banks will show a character of niceties to the privileged defaulters and looters, a show of dishonesty to the institution. The banks will extend write-offs, CDRs, technical write-offs and subsidized loan to some people. The banks, in a show of dishonesty to the not so privileged borrowers, will clandestinely breach the loan dispersal contracts. The banks also manipulate the loan accounts, indulge in perjury and persecution, blackmail, and extend prevalence of corrupt practices. The banks can tamper with borrowers' loan accounts with impunity. View this irrefutable evidence. Whether the criminality of the compromised banking system can be substantiated with enough evidences. Yes. Evidence number 1. Let me be specific. Indian Bank, a public sector bank, entered into a one-time settlement with a borrower. The bank claimed that it had waived a whopping sum of rupees 32.5 lakhs in pursuit of one-time settlement with that borrower. The borrower pursued for truth through the RTI. The bank, to comply with CIC, the Central Information Commission's order, revised its waiver claim from rupees 32.5 lakhs to a meager 5,84,422. When pursued further under RTI for working details for the new claim, the bank claimed that it had lost all the working details in a system crash. As a borrower is portrayed to the banking system as a donor, if the borrower had gone to the bank under the pressure of persecution and blackmail, he could have been defrauded to the tune of rupees 20 lakhs. A miraculous destiny saved the day for the borrower is a fact. Evidence 2. The borrower was issued a possession notice by the Punjab National Bank on 22/10/2007 for a claim of around rupees 34 lakhs. View this corrigendum issued by the bank after 3 years on 17th of September 2010. The bank was claiming that it had inadvertently claimed a sum of rupees 34 lakhs and the borrower was demanded to settle the loan account with a payment of rupees 14.75 lakhs with immediate effect. As a borrower is portrayed to the banking system as a donor, if the borrower had gone to settle his dues, as and when the possession notice was issued in 2007, he could have been defrauded to the tune of over 20 lakhs. Now, I shall present you a witness to support my claims. The Government of India entered into a massive OTS on behalf of the NPAs in the agriculture sector in the year 2008. The Government of India settled the dues of the borrowers in the agriculture sector through a waiver scheme in 2008. The CAG was asked to audit the claims of the banks during the OTS entered into by the banks with the Government of India. CAG is the witness to how the banks tried to misappropriate from the government treasury. Just imagine the plight of the defaulting small medium borrowers of the banks in this country. The acts of the RBI, Ministry of Finance, PSU banks are not a challenge to the intelligence of the public but an perpetrated insult. This is an effort to enlighten the larger public that the banks in India are indulging in robbery. This is not the end. This is the beginning. The RTI reveals the identities of the growers, patrons and harvesters of the plantations of betrayals and their tentacles. This will be dealt with in part 2 of our RTI revelations.